to the consumption space. Mangalam today has put together a piece on the anatomy of India's consumption story. Mangalam, take it away.
Well, it's the third quarter, which is very important because it offers the first credible stress test of India's consumption recovery narrative, along with the festive season. Because, you know, at the same time, if you look at it, the thing that we're looking to get an answer to is, has policy met behavior? By September 2025, the government had already pulled almost every lever available to revive demand. Income tax cuts, GST rationalization, food inflation had moderated, rural cash flows were also supported by a healthy monsoon, and interest rates had peaked with expectations of easing ahead. So the question is, have these policy measures changed how Indians actually spent? So to look at all of that, I looked at every other metric that could tell you about consumption. Auto volumes, they remain one of the cleanest indicators of household confidence out there as well. Two-wheelers grew about 19%. Three-wheelers rose about 20% in the third quarter. These are retail sales. Tractor volumes surged over 50%. And these are not urban luxury purchases. They reflect improved rural incomes, mobility and demand, along with livelihood and passenger confidence. If you look at passenger vehicles, that grew just about 3.5%. Commercial vehicles grew 14%. This implies entry-level consumption is recovering faster than aspirational big-ticket urban spends, and that's exactly what one would expect 9 months into policy-led recovery. Then I looked at the credit card spends that Ritu speaks about. You know, nearly 1.9 lakh crore worth spending in November 2025, growing 11.5% year-on-year. And these are spends that capture discretionary spending on a real-time basis. The RBI data too shows retail credit growth remains skewed towards categories like housing and auto loans, while unsecured credit growth has moderated. At the same time, average spend per card has declined sequentially to about 16,500 rupees from about 18,800 rupees. Consumers are spending more in aggregate, but spending smaller amounts per transaction, also led by GST-led cuts. Online transactions, they accounted for nearly 60% of the credit card spends in November. Now, this has two implications. First, consumption is becoming easier to express via online expenditure. And secondly, demand recovery may not always show up in traditional retail metrics that we look at immediately, especially where price deflation has reset reported revenues. That brings us to the FMCG sector. Across FMCG as well, demand has improved sequentially while pricing has softened. Volume growth has improved over the last year, but reported revenue growth remained restrained to near mid-single digits. For staples at large, because this was not because consumers weren't buying, it's because prices had come down due to GST rationalization in September that reset MRPs across multiple staples and mass categories. At the same time, some of these input costs like palm oil, copra, crude derivatives, and packaging, all of them softened, as a result of which volume growth returned ahead of value growth. That's a healthier foundation for a consumption cycle more than margin-led expansion. And Goldman Sachs, in its recent note, highlighted that earnings downgrade cycle for consumer staples is likely behind that. And that assessment aligns closely with what the data on the third quarter is showing on the ground as well. Discretionary pickup too has been a standout. According to the government's latest advanced estimates, if you look at what the government is saying, private final consumption expenditure continues to grow steadily as a share of GDP, supported by stable inflation and rising rural incomes. Demand has been the early beneficiary from rural side, whereas urban consumption still remains on a slow recovery path. In previous cycles, policy-led stimulus often resulted in sharp but short-lived consumption spikes. This time, it appears that the recovery is slower but structurally stronger. Finally, to the question, has consumption picked up? The answer is yes. But has it broken out? Not yet. The third quarter marks the point where policy intent, affordability, income stability, and consumer behavior finally align. But the real acceleration, if it comes, will depend on wage growth, interest rate easing, and sustained confidence. After everything the government has done, the consumers finally responding, just not recklessly.
All right, responding they are, just not recklessly, but a more structural recovery is the important takeaway. Mangalam, thanks very much for putting that into perspective so well. We have to take a short break, but don't go anywhere. We'll get you more on the markets on the other side and also get chatting with Devang Mehta of Spark Private Wealth Management.